Welcome to another S&P 500 Trade Watch analysis. Today is July 19, 2022. In this video, we're going to quickly run through some of the price action on the ETF for the S&P 500, the SPY, and the ETF for the Nasdaq 100, the QQQ, and the Russell 2000 ETF, IWM. And also, we're going to just quickly take a look at Netflix post-earning price action, and also Apple and Tesla. So stay tuned. Now, before I begin, just want to remind you to smash that thumbs up to help me promote this video on YouTube. And if you are not a subscriber to my YouTube channel, click on the subscribe and subscribe to this channel if you'd like to see more of these videos. Looking at this daily chart of the S&P 500 ETF, the SPY, as you can see, the price came up to this resistance zone. Yesterday, got a pullback, a liquidation break in the afternoon, and today you see that it gap up and it just rally all the way up and bumping up against the upper edge of this resistance zone here, and also beneath this upper range of the expected move. I have a calculated the upper range move, the upper zone here between 395 and 393.81. And looking at the 60-minute chart here on the SPY, remember yesterday we saw this liquidation break and came down to this resistance support zone here. I was basically looking for a follow-through, looking for a little bit of a bounce, maybe a chop around in this area here today, then look for a short location to see a to trade for a follow-through down to this lower range. But as you can see overnight, the future was actually moving up, and we saw a gap up in the morning when the regular trading hour session opened up, and it opened up right inside of this high volume zone, this balance area, and it just trended up all day long. And right now, it's just kind of bumping up against this resistance zone that we identify on the daily chart here, and also underneath this upper zone for the expected move. So tomorrow, be watching to see will we get a pullback and maybe possibly come back and test this this point of control here, this version point of control, or was version point of control at 389.16, and see will it be able to hold this and get a bounce, or would it retrace back down to this 385.87. Now, the other possibility that it could just push right through and get up to this range here, right? This upper range of the expected move between 395 and 393.81. And for the QQQ, you notice that the price also came up to this resistance zone here, or this gap zone. It did not completely fill the gap today, so we'll see. Maybe it will push up tomorrow and fill this gap before we see a little bit of a pullback, or it will just continue to push up and get into this upper range zone of the weekly expected move. And here's the 60-minute chart. Remember yesterday we saw this pullback here, the liquidation break, and similarly, to the SPY, basically looking for a continuation of a downward move and get back into this zone here, this high volume zone, and possibly come down and test the expected move lower range zone. But as you can see, it also gapped up just like this SPY, and well inside of this high volume zone, and it trend up all the way up to this resistance zone, that gap fill zone that we just mentioned on the daily chart. So we'll see, will it be able to come up to this 299.25 tomorrow before we see a pullback. And again, basically, this little bit of a price action could be shifted over here, and we might see that type of price action here, come down to 295. Basically check this point of control and then pushes up and try to tag the upper range zone for the expected move between 302 and 350 cents area. And look at here on the Russell 2000 ETF IWM, it actually came up to the expected move upper range zone here between 179 and 178. It closed at 178.68 today. So we'll see will it be able to continue to push up and move beyond this expected move upper range and come up to this gap fill zone area and near the 181.36, 181.50 area. And here looking at the 60-minute chart for the IWM, you can see that it came and tagged this resistance support area and bounced right up and just trend up all the way up to this upper zone area here. Now you could say that the price actually came up and tagged this point of control, pulled back, but it pulled back all the way down to this edge here instead of pulling back to this upper zone of this this upper edge of this resistance support zone that we point out on the daily chart, and then bounces up. So in regardless, the price scenario is not ideal, that to say it's going to move all the way down on the straight line, that kind of stuff. It's just a map, some idea of what sort of price action we could look for. And if we see any similarity to what we think it might do, then we just have to pay attention and use your judgment and your diligence on your trade location, your trade setup, your trading plan, and put all those to work. Right? So don't rely on someone to feed you and say, here, enter long at this price. It's never going to work that way. So anyway, we're basically looking at IWM to see what it chop around here and continue to push up into this 181 area here, or will it pull back and come back into this zone and once again chop around and test this area here, the support zone, and then see how the price will hold up. And if it doesn't hold up, then we could see a dip back into the zone. But right now, the IWM or the Russell 2000 appear to look pretty strong here. The last few days, you see this is one time framing up for the last 3 days. Now let's take a look at Apple. Look at Apple. It held above this lower range of the expected move and came all the way back up. It didn't get above the yesterday's high. It put in a strong candle here, and it is a inside day, and it is bumping up against this resistance zone here. So we'll see, will it be able to break through this resistance zone tomorrow and work its way up toward this upper range zone here for the expected move near the 155 area. And here's the 60-minute chart on Apple. You see yesterday it pulled back, and we're basically looking again, essentially pretty much similar to the SPY and the QQQ for some sort of follow-through and come down to this lower range here, essentially this particular downside scenario. But as you can see today, it bounced right back up after this little doji hammer type of a candle here from yesterday's close, and it just pushed back up into this this resistance zone here. So we'll see if it be able to push through and work itself up toward this 155 range toward the rest of the week, and see what attack this range. Essentially it could be like this here, and instead of pulling back here, it pulled back a little bit deeper than we initially thought it would do, and now it pushes away and break this zone. So if it could get above this 152, then look for this 155. That's what I would do. So we'll see how this thing play out, but definitely Apple, remember, we're basically looking at this trend line. As long as it's hold above this trend line, I think Apple could move a little bit more toward the upside. Now, looking at Tesla, did a little bit of a hangman type of doji candle today. It was a little bit indecisive in the early on today, and just basically going up and down, chopping around. But right now, it seems to be just holding. So again, just a reminder, Tesla is going to report earnings tomorrow after the market close. I would not be doing much with Tesla at all until after it report earnings. Wouldn't be surprised that it will just kind of hover around this area here until earnings comes out, and then it will basically either going to move up to this upper range expected moves zone or down to this lower range, and could just come up and test these resistance or this support level here on this daily chart. And here's the 60-minute chart on Tesla. I see the first hour just kind of huge white candle here up and down, and spend most of the day just kind of spinning inside of this candle. It did peak above it a little bit, but again it still closed back inside of this engulfing candle. So right now it is sitting right near the inside of this range here and hasn't done much yet, but I wouldn't be surprised that it will break out of this zone here after the earning comes out tomorrow after the market close, and it could either come down to this zone and possibly dip down into this support level, this support zone here down near the 632 area, or push up above this zone at 759 and come up and test this resistance zone and possibly get up to this upper range of the expected move at 795. So that's basically, I'm just going to sit tight and watch the price action tomorrow on Tesla and see how that would influence the SPY and the QQQ. Now let's take a look at Netflix. Netflix reported earnings right after the market closed today. And I guess the market was expected positive news from Netflix, or could not get any worse than last quarter. And as it turned out, it only lost half of what the market expected to Netflix to lose in terms of subscription. It only lost a little bit under 1 million subscribers, and the market was expecting Netflix to lose 2 million. So actually it's turned out to be better, and you can see that the we're going to take a look at the after hour price a little bit later, that it actually moved up. And here we see that it could come up to this gap fill here if the positive reaction continue on Netflix. But right now we basically had a expected move projection based on the market, the option market pricing somewhere in the $230 level. And here is the 30-minute chart of the Netflix during the regular trading hour session, and you can see that it came down to this have this composite point of control here at 188 and change. Came down and got a nice bounce off of it, and since that candle is basically just trending all the way up until the close, and it closed near the 201.53. So it was up over 26 points. And now let's go and take a look at the after hour price after the earning report. And here's the upper range of the expected move for the earning. Basically determined that using the option market, the option pricing, and that's based on last Friday's close. We came up with anywhere between 217 and 230. And as you can see, the price came up after our post earning, and it came up to this level here, somewhere around 223. So we'll see, will it be able to hold up on this price level here? And it is sitting at this zone here. So right now we're essentially looking to see would it be able to get through this zone, and if it does, then we're basically looking for the possibility of it might come up for the 240 level and get into that gap. So we'll see, will Netflix continue to move up, or would it come back in and dip back underneath this high volume zone and possibly just chop around here. So we'll see how this play out tomorrow on Netflix. Now let's do a quick recap on Goldman Sachs. Well, yesterday, Goldman Sachs, before the market opened, it reported earnings, and we see that the price spiked up and then pulled back into these high volume zone here, and also this high volume node. And today, as you can see, that it have a rebound and follow through and took out this expected move upper range and move beyond this little bit of a high volume zone here. And now it appears that it might be coming up to this 318 and this high volume zone here. Now, the thing that one must learn about these high volume zone, I mean these upper range zone for the expected move, do not, I repeat, do not try to trade them back into the zone. Okay, in other words, like Goldman Sachs here broke out of this range here today and move beyond it, right? Because the option market is pricing this expected move that 68% of the time the price will be inside of this range. Now, it doesn't mean that once it breaks out, then there's a 68% of a chance that the price will come back in. That's not how it works, okay? Because once it breaks out of this zone, this range here, that means something significant has happened, and it could just move the price away from it and get into the 2 standard deviation move, or even more, right? So don't try to trade this thing back to the zone, to the range. What I would do, now that's for me personally, I'm not telling you what to do here. I would use these zone, this range as potential target. For example, like Goldman Sachs trading here and then start to move up. Then if I go long on Goldman Sachs today, I will first target this range here as my initial target. Then once it break out of this this high volume node here, then I will find another target level, maybe up at this, coming up to this edge of this high volume zone here. Okay, so use those as target. And if you are looking to short this thing coming down, let's say the price is inside here and it seems like it's moving its way down and kind of give you, your short setup or whatever setup that you use to trigger your trade, then, use this zone here, this range as one of your possible target. Okay, that's how I would use it. I would not go and say, yeah, it break out here, now I'm going to trade it back. Try to short this thing back into this range here. No, I don't think that's a good risk and reward or a high probability trade. But hey, whatever works for you. But I'm just giving you what I would have, what I would do in, using these range here. So right now, I wouldn't be surprised to see Goldman Sachs move back into, down here, move it back down to these level here at 310 area and possibly get back into this range to close out the week and, wipe a lot of those option player premium off. And then they could, the market maker just, capture all those premium. Now, looking at BFA, similarly, BFA also got a nice bounce back up today. And, after it got rejected up at this zone here today, it actually tried to move beyond the zone and possibly moving up toward this expected move upper range. So if I were long BFA, this zone here, this range here will be one of my target, and also this zone here. All right, so that's how I would use these zone. Definitely, I would not go and wait until it come back, go out, and then I try to look for a short to short it back to this this range. That's a low probability trade in my mind. Okay, so that's today's little bit of a brief recap on what's going on with the price level and the price action for the SPY, the ETF for SP500, the QQQ, the ETF for the Nasdaq 100, and the Russell 2000 ETF IWM, and Apple, Tesla, Goldman Sachs, BFA, and also Netflix. So thank you for watching, and be sure to smash that thumbs up to help me promote this video, and stay safe.